Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Parag Milk Foods, whether it can perform in FY22 or not, or whether you should avoid it. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Parag Milk Foods, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. It will also help you ask me questions on a daily basis. Once you get the $10 membership, you will have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. If you have a number of stocks with you or a portfolio with you, you can directly email me and maybe we can work things out. Now about Parag Milk Foods. Established in 1992, they provide milk and milk products all across India, one of the top brands in North India especially. And over the last 20-30 years, it has been a renowned brand with people of all walks of life, especially in the lower middle class and middle class families. And packet milk is usually sold by Parag big time in northern part of India. Has expanded base quickly across the nation and provide various milk products as their own brand. Some examples being Go Cheese and Govardhan Ghee. The market cap of the company is around 900,000 crores at the moment. If you look at the financials, then the sales dropped by around 35% in Q1, although sales of one particular brand, that is Amul, really exploded in this time. So that can just tell you that how they have lost market share in this domain. So sales dropped by 35%, profit of 27 crores became profit of 3 crores, a drop of nearly 95%. There's a good promoter and institutional holding, so that's a positive for the stock. Return on equity is of 11%, operating profit margin is of 8%, and it doesn't have any debt, so that's another big positive for the company. So what has been ailing the stock, or why the stock is not performing that well, even though it is in the consumer domain, it is in the food consumer domain, and yet it is not performing? Heavy competition, and competition is big time from other big MNC players, other big Indian players, Amul, Nestle. There are other players, listed players, which are doing pretty well in this field, and Parag Milk is lagging behind in that respect. And really Amul is the big, you can say, the granddad of this business, and it is virtually impossible to really tap into the market share of theirs because of the kind of, you can say, following that the company has. So Amul milk, cheese and other products are being sold big time through retail outlets rather than products of any other brand. So huge competition in this space. A laggard in industry, as I said, Amul being the big bull. Shutdown has led to more market share erosion. So instead of market share coming back, instead of more people buying into products of milk, packaged milk products from other brands, they went ahead and bought from Amul, and Amul has had an expansion in this brand. So whoever was used to buy milk from, you can say, dairies and directly from individuals in dairies, they went ahead and bought from Amul, even though it has been expensive. But people have a belief that it would be more safer to buy from Amul rather than from any other brand or daily dairy, and that is what has happened. So more market share has gone to the largest player in the market rather than the second or third rung players. And that's why I believe that in every sector one needs to be in the top brand, one needs to be in the top company who has the biggest market share, because in difficult times these are the companies that gain even more and come out even bigger. And that is what has happened with Amul, and that is where Parag has lagged behind. So as I said, investors wants the best in the business, so this has not been the best. If Amul was listed, people would have looked at it and bought it big time, and the valuations would have been 100 times. I have no doubt about it. But since it is not listed, it is not a fact that people will buy anything or something which is second or third rung to Amul, which has a greater market share. Uh, Especially 2 3 years back when it was listed and doing very well, it had very lofty valuations, Parag, so it had to fall, and so the correction is still ongoing. It needs innovation and constant research on their products, and probably have some sort of you can say fight with the top brand, and get some market share back in order for the price to go up, the stock price to go up. And unless that happens, I don't see a bigger price movement on the stock. So what needs to be done, in my opinion, it is a complete avoid, even at these levels. Let the numbers improve. The best thing to do in such companies is that let the numbers come in. Even if you buy 30 40% higher, there's no harm. Rather than buying now and waiting for the numbers to turn around, it is a very difficult task. We have seen that happen with Kaya. We have seen that happen with Future Group. We have seen that happen with many multiple companies and multiple industries, where we thought that a brand could do really well, the numbers would come in, and the numbers do not come in. So wait for the numbers to come in, and then probably buy 30 40 even 50% higher from current price, because then you are sure that the price would continue to go up. Market leaders will continue to outperform. So in this segment, the unlisted player will continue to outperform. It will be very difficult even for the listed players to make any margins or take more market share. It can be looked at on massive market fall. So something like what we saw in February, March. If that happens and you're lucky, you have a lot of money, you can put in some money into Parag Milk and probably look for 50 60% upside. But I would suggest getting into top quality brands across the board. Probably a Nestle as a listed brand at 15,000 is a much better player than to get into a Parag uh, milk. And remember, not all consumer products or consumer stocks that are listed are good. It's not that you have to buy all the consumer stocks. Buy the best in the business, and always stick to them. And only have 5% of your total holding. Do not buy more into it, because things can go wrong very quickly in mid and small cap stocks. So that's why I keep saying that have 5% at the initial holding, and then when it goes up a lot and you're making good amount of money, and you see that more traction is possible in the next 4 to 5 years, then you buy more, increase the holding. It will increase automatically because your stock price will go up. So have begin with 4 5% of your total holding into such companies. So this was my video on Parag Milk. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. And also kindly subscribe to my Patreon network. I hope you'll like it. Once you subscribe, you'll know the benefits of it in more detail. Once you have a 1 month subscription, you can always delete the subscription at the end of the month. The cycle is from the first of the month. Thanks a lot for watching.